Welcome to Let's Talk Investing, a co-production of the Globe and Mail and the Investor Education Fund. I'm Rob Carrick, personal finance columnist at the Globe and Mail. And with me today is Eric Kirzner. He holds the John H. Watson Chair in Value Investing at the Rotman School of Business at University of Toronto. And Eric and I are going to talk about dividends. Eric, in the bear market, a lot of old, familiar dividend stock names are trading with crazy high dividend yields. You know, usually they pay 2, 3, 4%. Now they're up at 6, 7, 8%. What is the market telling us there?
Well, the market is saying for many of them that this is a buying opportunity. Now, you have to be careful and distinguish a fallen angel, which is selling at a bargain price, from a company whose share price has fallen for a very good reason and likely to stay there. So you really have to look very carefully at quality. But certainly high dividend-paying stocks of really good companies, interesting buying opportunity.
How worried should I be about a dividend cut when the dividend yield seems sky high to me?
Well, dividend cuts are looked upon unfavorably by investors. Sometimes there's a very good reason for it. Sometimes it's the solvency problem, and the company just can't afford to pay dividend. That's a real concern. Sometimes companies preserve capital because they've got great investment opportunities and they don't want to pay out dividends.
So sometimes a dividend cut can even be a good thing.
It actually can be a good thing.
In the resource sector, that seems to be more prevalent, where a company will pay a dividend during times of high commodity prices and then will cut the dividend back. But generally speaking, if I see sort of an old, reliable company that's been around for ages and I'm very familiar with them, but I see the dividend yields like double its normal level, do you consider that a buy signal or an alarm?
Well, I would see that as something that I want to investigate. So if I like to use a filter approach, I like to pick out companies to evaluate, and one of the factors I use is dividend yield. So if I see a high dividend yield on a well-known company with a strong branding, I'm going to be very interested.
I'm looking for bargains in the bear market. Should I latch on to dividend stocks as something as sort of a starting point?
Rob, I would use that as a filter, what I call a filter, a good starting point for evaluating companies.
One of the things that I've always thought was appealing about dividends was the potential for dividend growth. You buy a company, they pay a dividend of 10 cents a share per quarter, then they grow it to 12 cents, and then it's 15. And before you know it, it's 20, and you've got you double on your dividend. Is that a sound footing, do you think, for investing?
It is a sound footing. There is another approach as well, and that is to buy companies that have great growth prospects, that don't pay dividends, and to compound through the share price appreciation. Both work if you have the staying power. You need discipline. So if you stay with a dividend-paying company and you reinvest the dividend, you're going to get that type of compounding you were talking about.
You know, I wonder if there's almost a cult of dividend stocks. And I go back to the tech meltdown, and no one thought about dividends. Dividend stocks were totally out and were out of favor. And then we had the crash, and then we had the bull market. And in that bull market, a lot of dividend stocks seem to come to prominence, and there's been a lot of focus on them. Now, you seem to suggest that that's not the ideal thing for a company to do with its cash.
In theory, I think companies shouldn't pay dividends at all. If they can earn a higher rate of return than I can on my own, why should I have them paying out money to me, which I'm only going to have to reinvest back in the company anyways? I'd rather they invested in those great projects that had high rates of returns and that the stock price grew.
Okay, in closing though, a company pays a dividend. Is that a good sign about the company?
In general, it is treated as a good sign by investors, and so that tells a story in itself.
Thanks, Eric.